Hey, what happened to our music? Hey, good morning. Comment allez-vous? How are you? Hey, let me move everything around. How's your coffee this morning? Good? It's still morning here in America, 9 a.m. You might be somewhere else in the world. It could be lunchtime. It could be dinner time. But thank you for being here. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades. Ideally, to minimize our risk and, well, identify opportunities. With that being said, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne McDonald. I'm a currency trader like you. This is somewhere around 20 years for me, so I've learned a few things. There's a lot of water under the bridge. So please let me know how I can help. I consider myself a servant in our relationship. So please let me know. Or as they say in Atlanta, Georgia, what do you have? Just ask and I will do my best. Technical and fundamental analysis, trader psychology, it's all fair game. If you look at the description below the video, there are many resources available to help besides these daily live streams. There's a link to my book, Strategic and Tactical Forex Trading. There's a link to 65 hours of foreign exchange trading at fxbootcamp.com. There's a link to tradersway.com, of which I believe to be an ethical, trustworthy foreign exchange broker that doesn't trade against you. So if you want to trade with an ECN, get a direct connection into the interbanking system, Traders Way is the broker I recommend, tradersway.com. We all need a broker, yo. One of those hair days, huh? One of those hair days? Wayne, if I'm trading USD yen and pound dollar and is making profit, is it wise to take profit now and buy low again? Well, how would I know that? I don't know why you took the trades. Do you understand that? I don't know why you took the trades. Someone might want to hold that trade for 3 months. Should you get out after 3 or 3 hours? I don't know. Why did you take the trade? So then you expand a little bit and you say, to avoid the volatility of FOMC, the volatility of non-farm payrolls, the volatility of the election, the volatility of other central bank decisions this week. Well, there's a lot. Yeah, there is a lot of volatility. So should you... First of all, I'm not going to comment on your trades because I didn't make your trades for you. So how could I give you advice on getting out? But yes, you would look for tops and bottoms if you're using price action. But also think about this week. There's so much going on fundamentally that there are many traders that are exiting this market, not entering. When you see when you see a slew of central banking policies, in particular one from the reserve currency, and you got a huge non-farm payrolls, jobs report from the largest economy in the world, and you have a political election coming up from the largest economy in the world. Are you adding money? Does that look like a good opportunity to invest? Probably not, right? So there's more money coming out of the market more likely than going in. You know what I'm talking about? So it's the logic and the advice I'd give to you. Okay? All right. So with that being said, let's go through the calendar. Let's see what you guys put in the post, in the poll. And then when that comes up, I'll pull up the calendar. Rudolph the Red-Nosed Reindeer. Yep. All right. Calendar. Most people are looking at euro and pound. That makes sense. All right, cool. European GDP. Not that good, huh? It's not that bad either. But look, compared to before, huh? Big change. Slowing economy and interest rates going up. What a tough world we live in. Now, today you should be focused on Aussie dollar, and only 6% of you are focused on Aussie dollar. Okay, we have Governor Lowe speaking. Okay, we have real estate data coming out, housing data. We got the RBA interest rate decision. So I'd almost go wink, wink, nudge, nudge, shame on you. You're trading what you always trade, and that makes you habitual. Don't be a habitual trader, huh? You should probably be looking forward to the RBA interest rate decision tonight. You should probably be front running. You know what I mean? Yeah? Huh? Yeah? Oh, I forgot. In case you haven't done so yet, can you leave me some feedback here? I want to know this. This is I need some feedback and advice in regards to the books that I'm writing. If you could visit twitter.com/fxbootcamp and let me know what subject matter interests you most, I'd appreciate that. Look, there's the cigar I enjoyed last night. Isn't that nice? First cigar of the new book. Let the games begin. Nice, huh? It's a good cigar. Really is. Thank you, Henry. I appreciate that. Okay. So anyways, RBA, very, very interesting, very, very important, right? Yeah, Jim, yeah, I don't know. I don't know. See, the problem is I like writing. That's how nuts I am. I enjoyed all the papers I wrote at Harvard. I loved it. It's like a puzzle because you're like, okay, here's a challenge. I got to write something about this subject, whether it was you read something, you know, whatever, some research, whatever. So you always sit there, you're like, oh, okay, well, what do I want to say? And you're like, you don't know what you want to say. So you decide what you want to say. And then you start structuring and organizing, right? You know, okay, I need this, I need this, I need this, and that piece. Do a little bit of outside research. How are you going to fit that in? Where's the cool quote going to go? Where does the tidbit go? Great. I like to work on the, very often I like to work on the conclusion first or the entry, the opening first. And then I just knock out the feedback and then, or anyways, I focus on structure. So I like to do that, right? But yeah, but I know what you're saying. I'll probably have to end up doing that. All right. Okay, so movingon.com. Tuesday, we have ISM manufacturing PMI. And that's okay, we're not really a manufacturing economy, but I would look for inventories going up. That would show that what the Fed is doing is working. I think more interesting is I want inventories to be down, right? Hiring up. I want this PMI, manufacturing PMI, and then later the services PMI. I actually want them to come out, quote unquote, bad. I want them to show that what the Fed has done so far has not had an impact. I think that'd be best for trading. So companies are still hiring, consumers are still purchasing, supply chain challenges are easing. Okay. And I think that would just be best for trading. Okay, whatever. Moving on. Go back into the Asian session, and now it's New Zealand's turn. Okay. So Aussie and then Kiwi. So back to back Asian currencies. You should probably be trading those, starting that process now. Then on Wednesday, we have another dumb prediction, ADP. That's always a good scalp. That's at 8:15. And then, of course, pachow, 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 the real news of the week. The FOMC interest rate decision in the United States of America. Okay, that's it. That's the big event of the week. Thursday, Bank of England interest rate decision. Pretty important, don't you think? And then Friday, non-farm payrolls. I will be at FX Street to host Trade Non-Farm Payrolls Live for the 199th month in a row. $199 months. And that'll be at the FX Street YouTube channel. So hopefully I'll see you there. I wonder if there's something scheduled yet. No. No.
Hello, fellow traders. Welcome to this short introductory video about the FX Street Premium trading.
So if you're interested, make sure to check our views on the market.
Oh, it's something else.
So,
yeah, I thought so. I'm like,
and I wish you a very successful.
But that's awesome. They put me on the cover. That's awesome. Oh, I'm so proud of me. I didn't know that. Oh, where did that slide go? I like that slide with my
camera running.
Gotta find that slide.
That's what was going on back then.
I wonder what it's called. Welcome to NFP Traders Way. Yeah, I gotta pull that up. Gotta find that. All right, I'll move that to the side. Anyways, long lost memories. Long lost memories, anyways. All right, so let's move on with it. Non-farm payrolls on Friday. It's a doozy. Oh, by the way, another thing on my to-do list, I contacted the hotel in Nashville about our national conference, our annual conference. It wouldn't be national, it'd be international. Our annual. I contacted them about our annual conference. So I hope you're willing to fly into Nashville, Tennessee, the capital of country music. So if you're from another country and you're like, man, I always wanted to go to America and see cowboys. And well, I might be able to get you backstage in the Grand Ole Opry. Was that right? Memphis? Cool, right on. So hopefully you'd be there, huh? So anyways, I started that process too. All right, so let's start with this idea here. Let's go into a smaller time frame. Okay. So one of the things we were talking about last night in the day trading group. Did you know the day trading group meets on Sunday nights? Okay. So one of the things we had lined up here, okay, was one of those things. Do 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 do. Scooting with everyone, yeah. Well, it's a big hotel, so make sure they're comfortable. The thing is, there's actually no need to leave the hotel, so maybe we could do like a post-conference event where people can stay a little bit longer if they want to go into town and see the capital of country music. There's all kinds of bars, country music bars, and all that kind of stuff. Yeah, what is that, the 21? Let's take a look. It's a 55. Okay. Yeah, it is. Aaron says, hey, Nashville is beautiful. We'd do it in January, most likely. And so you don't actually want to leave. I mean, going into Nashville is nice, but it's cold. You know, all that kind of stuff. It's cold. I want a place where you can just roll in to the hotel and you don't want to leave. And it's one of those hotels where you actually don't want to leave. You don't need to leave. But if you had to, like, if you wanted to be a tourist for a day or so, there's a couple of things that we could possibly do. I could take you on a steamboat ride down the river with, you know, dancing and music on stage and dinner tables. So we could all, you know, that kind of stuff. And then we can go into town and, you know, you can ride a mechanical bull if you want, but actually you can do that in the hotel. So anyways, we can do some fun things at the hotel. All right. All right. So anyways, so that's that. Break it down. Make sure you have congruency amongst time frames. You do boop boop. Get off the weekly. Go on the 4 hour. Yeah, I look at weekly. Okay. What do you see here? Well, it's a higher high, so it's a tough trade to take. But that is a bearish price, if there are bears. I'm not saying there should be bears, all that kind of stuff. Really, if a bear sold this here, I understand why. I just disagree with how they're doing it. Okay. Brian said, ooh, some bells and whistles. You know what? I actually had contacted the steam paddle ship. Just like in the old movies, if you're European, you're like, oh, just like in the olden days in America. Yeah. I actually contacted them. I was going to take my family on it because I thought it would be a hoot. And so I arranged for the captain's booth where you sit, anyways, it's fancy, right? And then my wife and kids didn't want to do it. I'm like, what? And they're like, oh, it's just going to be a crowd, and you're going to be on this boat, and the music's going to be loud, and the food's going to be terrible. I'm like, yeah, I know. That's why you do it. And we'll be in the captain's booth. And they're like, nah, skip it. So we skipped it. But we could always have some fun. Okay. So anyways, if you were a bear in here, I would understand what you're doing. But I would argue that you're doing a bearish swing trade in a bullish trend. And I would say you might make money on that, but you're taking some undue risk. So what I would rather see you do as a trader, if you're a bear. Now, technically, nothing says bearish here. This is just a bearish price. So you could argue on a different time frame, there's bearishness. And you're prepared to sell it. I'm like, okay, I'm not disagreeing. I'm not agreeing, but I'm not disagreeing. But if you were going to do it, I'd rather you have this drop down to the 55, have it come up, and do sort of like a lower high double top job, and then take it down. So it could be done, but be careful. That's all I'm saying. Okay. Now the bullishness just shows that there's a bear here. Okay. And if you're a bull, that by definition, being bullish, you're like, yeah, those bears are stupid. And you're just going to take this up. Okay. This 50% pullback says be careful around here. Okay. So that gives you a day trade. That's a simple day trade. So you'd buy it around 170, 171 to 170.50. Probably more like 170.50. And your target is around 74. So here's your trade plan for today and tomorrow. You're welcome. If you're a bull. I don't know if you're a bull. Are you a bull? Why are you a bull? Do you know why you're a bull? Okay. The mayor says it looks like 100% extension. I don't care about 100% extensions. You might be right. It's not something I pay attention to. Maybe grind. You know what? Just use a stop and don't worry about it. You have to make a fundamental decision. You know there's a threat. But I think of it this way. When like you're in active combat. Dude, active combat must be frightening. And it's certainly dangerous. So you could be, laying in the foxhole 24 hours a day. But you will die. They'll just walk right up to your foxhole and shoot you in the foxhole. You're dead. It's frightening, but you have to get up and you have to keep doing your job. You have to keep moving. You have to keep firing your weapon. You have to achieve the mission. And if you're going to get killed, you might as well be killed trying to achieve your mission than hiding in your foxhole, quivering and shivering with fear, right? So, like, there's no doubt, as you mentioned, yield curve control, and it's not the yield curve control now, it's really the intervention that you have to worry about, which is different. And it's almost certainly going to happen again. It's happened 3 times. Will it happen again? Almost certainly. At what price? Well, we don't know. What time? We don't know. What day? We don't know. So make the trades, jam your stop, and keep moving. Take your shot. If you're going to be a bull, like the biggest one you have to worry about is this one. So if you're going to be a bull, buy a dip, jam your stop, keep doing it. Keep moving. Keep moving. Okay? Fire off your trades, keep moving. Oh, but what if they intervene like here? Yeah, they might. Drop a stop. Keep moving. Okay? If you're going to trade it, don't trade it with fear. Okay? Trade it the way you were taught. With, right? Being conservative, being disciplined. But you can't trade with fear. Because you know, and again, we work a lot on this in the day trading group. Okay, we work a lot on, in the day trading group, and where was, I guess it was this one. Okay, people were worried in because here was some intervention. Okay, and so people were worried about this intervention again. At around 145. And I said, yeah, you should be concerned. That's where it happened before. Will they do it again? I'm like, I don't know, maybe. I don't know. But do your job. Okay? And then people were worried around 150, right? Wherever that is now. Okay? And they're like, well, are they going to intervene around 150? I'm like, I don't know, but do your job. Okay, it went up another 200 pips before they intervened. And so what I was talking about here at 145 and at 150 is like, imagine this is going to go to 200. Won't you feel stupid, or ashamed? I didn't say stupid. Won't you feel ashamed that you were afraid at 145 to make the trade? And then you were afraid at 150. And I said, well, then you're going to be afraid at 155, 160, 165, 170, 175, 180. Like, you're going to be afraid this whole time. But if you looked back when we were at 200 on the Japanese yen instead of 150, I'm like, and you missed out on a fortune of profitable trading. I'm like, won't you feel silly that you were afraid that whole time? And now what are you afraid? Well, we can't get past 200. So I'm like, why be afraid? You know what to do. You're well trained. Okay? But recognize the threats there, but then address it. Okay? And by the way, look what happened with the intervention. All we did was reset what used to be resistance became support. And then we double bottomed there. It's behaving logically. This is not out of control, unless you're stuck on a 15-minute chart and then you don't know what the heck's going on. But this dropped and stopped exactly where you'd expect it to. And then it double bottomed. Okay? So the thing is, what are you doing now? Like this? And you're like, oh, but Wayne, I'm afraid. Paralyzed with fear, Wayne. Focus on the technicals. Focus on your training. Heading to the mountains like Floki. You know your Norwegian history, huh? What a jokester, that Floki. Grind says more irritated than fearful, getting sick of central banking intervention and stuff, or BS. Well, one professional trader said, I forget the quote. I'm not even close in the quote, but basically he said after trading Forex for all those years, right? He's like, central banks just constantly make mistakes. They just go from one mistake to the other, right? They let a bubble develop, then they let a bubble burst, and then they rebuild the bubble, and they're like, it's just one dumb mistake after another. But he's like, but that's how he makes money. If the market was rational, everything would be stuck at some form of parity. Nothing would move. Like the value of gold versus gold. Gold is gold. An ounce of gold is an ounce of gold, right? That's why we need an exchange rate. But anyways, central banks come in and do their best, and their best is pathetic. They cause more problems than they solve. That's not in my opinion. That's what this old timer was saying. And that's how he makes his money. So he doesn't get mad at them. So I'd say be careful, Grind. Be careful. You might have the wrong emotion attached to the situation, and the negative emotion can drag you down. You get frustrated and mad, and then it'll manifest in other parts of your life, and you got to just change that. You're like, no, that's a good thing. It's fine. It's perfectly fine. You're like, oh, great, another mistake. How wonderful. Okay? Don't love it. Don't hate it. You're like, it's just what we do. It's the opportunity in front of us. It's perfectly okay. Now, they got the challenge. We make the money. They create the problem. We make money. They solve their problem by creating another problem, which is great because we make money. Forex Pivot says, hey, how about diesel fuel? We're going to run out. Yeah, well, guess what? Then you're not going to be able to power up your generator. See, people want to talk about trucks. See, in America, we'll be very upset because we won't get 2-day shipping from Amazon. We'll get 3-day shipping. In Europe, their diesel generators are going to go out. Who's in the better situation? Germans that don't have oil or diesel to run their generators? Or Americans that have to wait 3 days for 2-day shipping? Oh my goodness. Because there'll just be less trucks or something, right? Electric car owners. I parked my murdered out Cayenne GTS next to a murdered out Taycan, Porsche Taycan, the electric Porsche. Man, it was nice. I have to admit, I don't like cars that much. Well, I love cars. But Porsche's really earned my respect. Every time I drive it, I'm like, this is well built. So anyways, interesting. But yeah, that electric Porsche, damn, that looked nice. Okay, so I am still waiting for dollar strength to resume. I don't really expect it. So this is what we talked about last night. And, okay, it's dropped. Great, 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 fine, fine, good. Actually, I wonder if Tech Art makes Taycan. Oh, they do. You guys know this company? This is the company that made my Porsche. What? No. It's pretty nice. That's not amazingly nice, though. You should check out this company, though. They just make these crazy Porsches. Yeah, look at that. Huh? Yeah. See, that's nice. All right, here's the newer version of mine, which is nice. Oh, I guess that's all they have. Anyways, they do make them. I have to take a look. All right. Anywho, if you're a car person, you dig that big time. All right, so down, 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 and then up, 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 up. So we're approaching a 50%. It's not that you buy it at a 50%. You buy it after it's respected one of these levels. So I've identified the roll reversal that way. Okay. So if it came down a little further, like a 618, that just predicts a 1382. We're about 50%. So let's put it this way. Okay. Like that. Okay. The 382 would predict, okay, the 1382. Sorry, the 618 predict the 1382. Okay? Which is about what's going on now anywho, huh? If you want to do it that way. Nah, let's delete that. Let's delete that. Let's do price action pivot points. All right, let's do custom price action pivot points, 55. Okay. Okay, so what we want to do is change that slope, right? Guten Morgen. Do Germans roll their R's? Morgen. Probably not. Guten Morgen. I did it again. Morgen. Anywho, so that's what that says. If it bounces there on a roll reversal, and one of the reasons why that the bottom of the area could be a roll reversals, you know, is that I'm looking at this old level here. Oh, let me change colors. Maybe blue. I'll make it blue. All right, I'm looking at this old level here, and then that works on this old level here, and so maybe that is this new level in the future. Okay, that's a 618, and that predicts a 1382. And that would probably fall inside this new range, you see? See what I'm doing? So we have the current downward pressure, but the more recent upward move. You see? You see? Could be one of those. Remember, I think all of this move since basically October, really it's the higher low of October, I think has a lot to do with money coming out of the market before the news, before the FOMC, before NFP, before CPI, before the election. We're only 8 days away from the election. Okay. You see? Now, on the long term, I'm a bear on this. Oh, faux show. So in that case, what I would want to see is, some point of some breach. Okay. But we have a lot between now and the 15th, in particular, the election. The election is big. It's a doozy. Yes, the FOMC is important, but the election's a doozy. Okay. So you got to make your decision. Thanks, Jimmy. Okay. So I guess while we're talking about this, it might be a bit premature. Okay. But when I was talking about subcomponents, okay, now I want the national report, not the Chicago, not the Detroit PMI, not the Atlanta PMI, we want to look at in the United States, but you get the headline PMI. Okay. By the way, currently Europe is at like 40 and they're jacking up interest rates incredibly fast, which is just unbelievable because normally when PMI is at 40, you're slashing interest rates. It's pretty amazing. But what we're trying to do is get a little bit of, I don't know, better information, more detailed, right? And when it comes to both services and manufacturing, when I said the subcomponents, I was talking about this, where you want to look at new orders. Okay. Are customers still buying with the high prices, with high inflation, with high interest rates? In Europe, it's obviously falling pretty quickly. Europeans have decided, you know what? They'll put their purchases on hold because they want to spend all their money on energy. Okay. Anything below 50 is negative. To say it differently, anything below 50 is contraction. So this data shows the companies are still hiring relative to before, but just barely. So what I was saying, the best outcome for trading, to have a clear direction, wouldn't it be interesting if new orders are coming in? Let's do it this way. There we go. New orders are coming in. And because of that, companies are still hiring. That them, right? The Fed has not yet had an impact. And therefore, the Fed will have to continue acting aggressively. And that would be the clear message when we get the next PMI. Okay. There you go. You can dive in, gobble it up. All right. You guys want to do gold, oil, and Bitcoin next? Okay. Seems like somebody has this pointed down. You're welcome. So not only, see before, remember the ribbon of moving averages was still pointing up, but I started drawing the channel down. And now the ribbons have rolled over and are holding price below the channel. So I was showing you how to be ahead of the curve, how to think forward. Another way of looking at it is, you know, you want to be a bear, but you can't when the moving averages are going up, right? Like you can't be a bear here. So when do you make the switch? Here? 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 When do you make the switch? See, the strategy says you want to get short, but the tactics say you can't get short in an uptrend. So you got to wait for what I would say the best opportunity is here. Okay? That's something we covered in the swing trading group. Okay? Because we already planned November. See, today's the last day of October. We have already planned through and through the entire month of November. And even much of the rest of the year, like, you know, December is sort of a consequence of November. And we've looked at everything: technical analysis, fundamental analysis, seasonality. The only thing that gets in the way is that the central banks are trying to prevent what would naturally occur. The pound would naturally weaken because it's a mess. The yen would naturally weaken because it's a mess. Okay? Dollar would naturally strengthen because the rest of the world is at different levels of messes. You know? And so central banks are trying to intervene just to prevent all of that. Okay. So it makes life interesting. But if that PMI report that I showed you, if inventories are falling and employment is rising, showing that there's still a strong consumer, that the economy is still strong, showing that the Fed has not had a negative impact or any impact on the economy yet, despite all the interest rate hikes, then if I get that right, gold goes down. Do you understand that? I would look at the PMI report and I'd go, pa-chow, sell gold. You're like, but Wayne, isn't that inflationary? Oh, the economy is, but you don't trade the economy. Okay? You have to make that distinction. That's why trading news is sort of like the wrong thing. The news is showing you what recently occurred in the economy. But the thing is, the stock market, for example, the stock market reflects investors' opinion 6 to 12 months from now. So I want you to be thinking about that. Is gold falling because we have high inflation now? Or is gold falling because inflation will be lower in a year? I hope you have an aha moment. I hope it kicks in. I hope you get it. Anywho, that's right. Got a lot going on. Nothing's right, I'm told. Yeah, let's take a look at Biddy. Biddy's caught on the psych level of 20,000. It was 20,000 last night, 12 hours ago. Still 20,000 now. Doesn't show risk on or risk off. Shows that the market's neutral. Maybe the market's neutral. When you look at Bitcoin, you should say, oh my God, nobody's trading it. And say, I wonder why they're not trading it. Is it all the central bank decisions this week? Is it the election coming up? And the answer would be yes. Look at that, huh? So are you trading big? I mean, here's the real thing. I mean, seriously, think about it. Are you trading today and last week? Are you trading it just like every other day? Is every day the same? You wake up, you throw some money down on a euro dollar and see what happens? Or are you making wise investment decisions? Are you truly analyzing the market conditions? Are you really? Are you saying, wow, we got a lot of risk coming up and I think money is going to come out of the market? I mean, and so do you change your behavior? Okay, it's a rhetorical question, obviously, but I want you to think about it. Is every day exactly the same for you? That's probably a problem. Because every day, I'll tell you, is not the same. Let me just... So right now, if you had $1 billion and the smallest trade you can make is what, 50 million? That would be the smallest. That'd be a scalp. You wouldn't throw down trades this week. I don't think you would. If you were going to front run, you would have done it last week. And now you got like both the Fed and non-farm payrolls, and well, of course, and Bank of England and RBA. I mean, you just got all of this noise this week. Really? This is a good time for you to risk some capital? Really? Oh, well, I want to just gamble it and bet and see what happens. Yeah, but you don't make those types of decisions when you have $1 billion under management. You just can't. You have a fiduciary responsibility. You don't even think like a gambler. That's very, very retail. So you're like, well, I got to roll this out. I got to hold on. I got to get through this week. And then you're like, but next Tuesday is the election. But the thing is, are you just thinking about it now? The election? Like next week on Monday, you're like, I wonder if I should front run this. No. You thought about this months ago. Right? Your front run to the election probably was early to mid-October. So let's say a couple of weeks ago. I gave an outlook for the election in January. Let me say that again. I gave an overview of the November election back in January. So with that mindset, with that thought process, I've done some research on what typically happens during the election season, in particular, not a presidential election, but a midterm election. Okay? In the second year, not the sixth year. So I have a little bit going on, right? I know a little bit. I'm not making it up. I also know some seasonality, so I know how I would like adjust and kind of roll with things this time of year. So if I could think about it and even talk about it, and by the way, in January, I did a presentation in front of hundreds of FX boot campers. Well, let's say 100 FX boot campers. And I outlined month by month by month, January, February, March, April, May, June, July, August, September, October, November, and December. I went month by month by month, explaining how I think the fundamentals and the technicals will work together to create the year ahead. And so you take that forward now. I think every hedge fund, by the way, would be able to do that. There's nothing special about me. I'm trying to say that this is what professionals do, so you should be able to at least try to do that. At least if you can't do it for the full year, do a couple of months ahead, right? And so what you would say is, what is likely to happen before, during, and after the elections in the United States? Makes sense, right? Well, what do you think is going to occur before the election? Well, you have to ask yourself, well, what are market conditions before the election? Are the markets bullish? Everything is awesome in America or even around the world? Or do things suck? Or are things benign? Well, I thought back in January, things would suck in October. Do you understand that? Well, how did I make that conclusion? Well, I guess you should have been a member of FX Bootcamp. But anyways, I made a decision. I either used logic or I flipped a coin. Don't matter, none. Okay? So I said, okay, things are going to suck. The dollar's going to be strong. It's almost always weak. Not this year, I said in January. Not in September, not in October. I almost always sell the dollar. I'm like, not this year. Why? I made a decision. I have fundamental analysis. I have 20 years of experience. I have a background in macroeconomics. So I put all that stuff together and I made a decision. Or maybe I flipped a coin. Who cares? So I made my conclusion. So then the argument here would be, well, how will the market behave before going into this massive risk event? What's the event-driven strategy? Add more money to, right? Or remove money? What do you think the answer is? If you had $1 billion or $5 billion or $50 billion, what do you think happens before a giant risk event? Add to your investments, add to your trades, add more risk, or remove the risk, remove your investments, remove your trades. Maybe not all of it, but what do you think happens? Add to the risk or remove risk before a giant risk event? Please answer. Let me know you're alive. Okay, there you go. Well, you guys answered. Great. So that's what you should be trading. Oh, but what about Chicago PMI? Mubarak says, or at least scale it down. It's the same thing. You're not adding, you're removing, right? So that's it. There you go. Now you know how to trade fundamentally. Chicago PMI is news. It's an economic release, right? An economic data release. It's not fundamentals. Fundamentals will tell you why the market is moving. And so if you can put some thought together, and this takes experience, you could say in January, well, what do you think is likely to happen in October? Can you see how that might be helpful? How many people here feel like that might be helpful if you can think about October and January and get a reasonable idea of what would likely happen? How many believe that would be helpful? To be able to think not just 3 days in advance or 3 weeks in advance or 3 months in advance. Okay? Maybe even 3 years in advance. Let me know. Come on, guys. This is important to your own psyche to type it out. You're making an emotional as well as a rational commitment to the way you think about trading. Okay? If you can't reach forward and type onto the keyboard because you're afraid, you're ashamed, you don't want other people to know what you think. What if you're wrong? What if you make a mistake? All that noise in your brain is one of the things that's holding you back. So you have to, like, nobody cares. Nobody cares about you. You're just in a chat on YouTube. But even if we were all in the same room at a hotel in Nashville, nobody cares about you, really. Ultimately, people care about themselves. So it's like, dude, you need to quiet that brain and focus on your personal development as a trader. You need to be able to say, yes, I believe fundamental analysis is the key to success as a trader. And that technical analysis helps me carry out my plans. It's a huge difference. But you got to be able to, if you can't commit to that, what can you commit to? Huh? If you can't commit to that, what can you commit to? There are boot campers, I'll tell you, they have very challenging lives. They have work, they have family, they have extended family. Some are taking care of grandma and grandpa and mom and dad. I'm telling you, to have a career, to have a family, and then take care of mom and dad, and then do Forex, the only time they have available to seriously commit to learning and practicing Forex as an FX boot camper, the only time they have is 4 o'clock in the morning, 3 o'clock in the morning, 2 o'clock in the morning. I know for a fact boot campers do it. But look at the level of commitment. I'm not saying everybody does that, nor do I say it's necessary, but it's necessary for them. They know it, and there's no commitment too hard, too difficult. So imagine again, right? Imagine again, I'm asking you to make a commitment in the YouTube chat, and you can't do that. Maybe that's what's holding you back. You got all this in here. Okay? Yeah, so we got some badasses at boot camp. That's for sure. Yeah. I'm telling you. Maybe that's why you guys, if you're not in boot camp now, maybe that's why you should join. You're just like, I want to be surrounded by a bunch of badasses. Yep. I'm telling you, our team does whatever it takes. And that's the minimum requirement. All right. Ladies, what's colder than cooler than cool? Ice cold. Let's do Brent. Let's not do WTI today. Let's do Brent. I find this interesting in here, this zone right here. Hang on, I just got 5 texts all at once. Hang on. I got to make sure the house isn't on fire. Hang on. All right. So that's the buy zone there. If you're going to buy some Brent. So Aaron says, hey, I've been waking up for the Euro Open, which is good. Since you're in Memphis, the other way to trade it, of course, is swing trading. Swing trading or day trading. So the basis of day trading, in particular in our time zone, American time zone, is to be able to front run the European Open. So you don't have to do it that way, but of course you certainly can. All right, so anyways, going here, if you're a bull on oil, that's the trade plan. Hua. And if you're a bear, okay, bears already sold last week. It's just that simple. You're like, but Wayne, how do you know? Well, you don't. But they place trades. Think of it. They place trades, not even on the weekly M4. They place trades because they had made the decision. I want you to look at the distinction of what other traders have done and then compare and contrast that to your trading. Be open-minded. critique yourself. Stop trading. Remember, if you think sitting here every day throwing down trades is going to make you a better trader, you're sorely wrong. Critiquing and analyzing your own trading and making tweaks. It's called scientific methodology. Okay, you analyze your results and you adjust, and then you analyze again and you adjust again. You have to be able to look at your trading history, look at what you're doing, challenge your process, and adapt. Okay? Everyone here probably read Darwin sometime in their educational career. And sadly, most of what we learned in school is incomplete or even wrong. So every person here read Darwin, and we know the world is about survival of the fittest. Well, Darwin wrote that when he was young. It was his first visit to the Galapagos. And then he spent 30 or 40 years of his life continuing his analysis and his studies of nature. And he's like, no. No, it's not the survival of the fittest, which you learned, by the way. That's all you need to learn. Boom, they just give you that first book. What he ended up saying is it's not survival of the fittest. It's the species that is most able to adapt. It's adaptation. It's not that you're the best trader. It's that you're quickest to adapt with changing market conditions. It's amazing how much we've been taught in school, which is either inaccurate or wrong. That would be one of them, where even Darwin said, no, that's sort of a mistake. So let me tell you what I found after 30 or 40 more years of analysis. Oh, but you're not taught that. We just all read the same books over and over and over again. Hey kids, we're not going to teach you how to balance a checking account, but you have to read Romeo and Juliet in iambic pentameter. Why? Why don't we teach our kids how to balance a checkbook? How to establish good credit history? Why don't we teach them how to buy a house? Why don't we teach them like the importance of insurance, the importance of saving money over long periods of time? No, let's read The Merchant of Venice, right? In sooth, I know not why I am so sad. You're like, great, so we know I'm iambic pentameter, but we don't know how to make an investment. So stupid. So anyways, what you learned about Darwin is somewhat wrong. So the adaptation here is like, this currently is going up, okay? And this was going up, okay? So there are two things that are going on here. Some people think this needs to go down, and some people think this needs to go up. Which one is it? Well, we don't know. So a good bull would adapt if this failed. If it started to look like this, for example. Ooh, let's do it in blue. If the next move was more like this, okay? At what point, see, this is very, 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 very bullish if you're a bull. But this is very, 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 very bearish if you're a bear. What we know from this price action is that right now in the market, there are bulls and bears, and there's a big fight that's about to happen. Do you want to get involved, or do you want to wait and see who wins? Okay. Oh, right on, Ashish. Greatest improvement in your trading. Awesome. That's really cool. Okay. So this is plan A for bears. This is plan B for bears. Okay. That's that. Okay. A bull is thinking this. Isn't that lovely? Hey, if you could you click the thumbs up button? Do it for YouTube. Let them know that you're here. Dollar pairs. Oh, we did those. Yeah, we did those. Yen pairs. And then we'll call it a day. Oh, wait. We did this too. I guess we went through everything, huh? Yeah, it's working out nice. Lovely. Lovely. It's just lovely. Yeah. All right. I guess we did everything. That's cool. Oh. Done. Done and done. Done and dusted. How do you spot the right entry levels using price action? Well, that's what price action does. So why don't you ask me that tomorrow? And I'll go through it tomorrow if you want. Make sure you subscribe. Okay. We can go through price action if you want. But that's a fairly easy question. So I'll see you tomorrow. Unless you're in my day trading group, then I'll see you later this afternoon to plan out tomorrow based on what occurred today and last week. I invite you to join FX Bootcamp. It's a whopping $88 a year. The first thing you're going to get is 65 hours of training videos. But also there's hundreds of indicators and templates and EAs available so that you can visit tradersway.com, download MT4 or MT5, and customize it like a 50s hot rod, or at least to match it so it looks like mine. Isn't that nice? $88 for all of that? You're joking. No, I'm not joking. It's ridiculously cheap. But you know you're going to fall in love and you're going to want to upgrade your account to one of the live trading groups. I know it, you know it, but whatever. Take one step forward. It's a step off a curb, not a cliff. Try it out. See if you like FX Bootcamp. See if you like Trader's Way. Peace on earth. May the pips be with you. May your profits be above average. Please have a wonderful day, and I will see you soon. Cheers.